in your earlier statement, you said when you started talking about shares, then you got to realize that people do not actually even understand what shares mean. So, for instance, if I'm coming to you as a financial planner and I'm a first-time investor, I have the options of treasury bills, shares, mutual funds, stocks. When you sit me down, which of these amongst these four would you advise me to start with and why?
Okay, so when I sit you down, the first thing is that I'll ask you, what is the goal of the investment you seek? Why do you want to do this investment? Are you doing the investment because in 3 years' time you need the money to go and do a project? Are you doing this investment because you think that this should be your pension fund? Are you doing this investment because you have the money sitting with you for the next 6 months and you don't want the money to be in your account, you want to invest? So that determines the goal of the investment. So the person may say, okay, I want something that is maybe 5 to 10 years for assumption's sake. Okay, so then I'll ask you the next question. 5 to 10 years means that you have defined your goal and perhaps is for some project you want to undertake or a business in 10 years' time. So the goal has been defined, the duration has been defined. I'll ask you, how much risks are you willing to take? Are you a risk taker or risk averse? Are you someone that you can take risks and not be scared, or anything that flips on when it comes to investment will make you trigger? So if you tell me, okay, I want to take moderate risks, not too low, but not too high, then it means that I have enough information to now advise you. So now, with this example you have given, I have the information now. I will tell you that if I was to be in your shoes, with the same information gathered, I'll go into shares or stocks, and then I'll go into mutual funds. You ask me, okay, what's the percentage? I can decide to do 50-50. I can decide to do 50% mutual funds, 50% shares. Then the person asks me, so tell me about shares. Shares basically mean that you are giving your money to a company. And you are giving your money to a company for two main reasons. And the two reasons is something you should keep in mind every time you want to go into shares. One is that I anticipate the share price to go up because shares are bought at a price. So I'm buying one share today at 2 cedis. My prayer and anticipation is that tomorrow the price will go to 10 cedis because it's a buying and selling business. When it goes to 10 cedis and I decide to sell, I'm getting a profit of about 8 cedis on the share that I bought at 2 cedis. So that's the reason why I'm buying the share. The second reason why I'm buying the share is that because I'm investing in the company, I become a shareholder in that company. And shareholders enjoy what we call dividends or interest. When the company makes profits, they share dividends to shareholders. So I want to be enjoying profit every year. So I'm investing in this company. So that every year, when you make profit and they share the profit by way of dividends, I get it. So that is what I'm going into. But then again, I'll explain that shares are not fixed income investments. When you say an investment is fixed income, it means that you will know ahead of time how much returns you are going to make. Treasury bill fixed deposits, they are fixed term. So if the bank gives you 10% and I'm doing 10,000, plus or minus, I'm going to make around 1,000 cedis for the 10% that I'm doing. No. Unless the world comes to an end, I'm going to get the 1,000 cedis. But when it comes to shares are not determined that way. Shares are determined by how the company performs and the impact of that performance on the share price going up. So whatever the share price will get to at the time that you want to sell will determine how much profit you have made. So example of is MTN. MTN was around 2 cedi 50 pesos from the beginning of the year. It went to about 2 cedi 90 pesos. Then it dropped again to about 2 cedi 70 pesos. It went up to 4 cedis. It came down to about 3 cedi 80 pesos. That's how it fluctuates. Now, depending on the time I want to sell it, that's when I'll get to know whether I've made 40%, 50%, 10%, or 5%. So if it got to 4 cedis, I want to sell it, I'm getting a certain margin. If it comes to 3 cedis, I want to sell it, I'm making a certain margin. So that is the mindset that you need to keep in mind if you are going to shares. There's nothing certain, there's nothing defined as your returns. So if you are looking for a hardcore fixed income investment, then a share may not be good for you. People are invested in shares and every day they come, Patrick, Charlie, cost you about from I say yes. That's how shares work. That's how shares work. And just like the cryptos and all those things, it goes up, comes down, goes up, comes down. So you need to be able to be sure that this is exactly what I want to do. People come to me, they talk plenty. Blah, blah, blah. Okay, now I tell them that this is what can happen. This is what can happen. They say, oh, is that so? Then I won't do it again. Because in their mind, they see that, okay, I said beginning of the year till July, a company like SIC has made almost 300% capital gain. Value of the shares has gone up almost 300%. It's good. I tell him that, you know what, you can buy it today with this particular price. It can do 300%, and the next moment, it can do negative 300%. Are you ready to manage that? Oh, yes, I'm ready. Then I tell him that, you know what it means? It means that if it drops, it's your capital that is going down.
Mm-hmm.
So if you invested 10,000, the price has dropped. Your investment may not be 10,000 again, maybe 8,000, 7,000. Are you willing to do that? Oh, this thing there, I can't. So then we'll switch to an investment that will work for me. So there is nothing like a straight jacket response when it comes to investment. And I've said this so many times on my channel. And sometimes people think that, oh, financial coaches, they don't go straight to the point. We can't go straight to the point because individual differences, preferences will determine what will work for you and what will not work for somebody. Someone who is going on retirement should have no business investing so much in shares. You don't have any business investing in shares. Because for you, there's going to be a cutoff of your income stream. And when there's a cutoff, you're going to rely on whatever you have invested and the little from SNIT. So that amount of money is not an amount that you want to go and be doing cha-cha with it. Investing in an investment that goes up, come down, goes up, come down. And one day, if you go up and come down and out of heart attack, you die. So again, that's what we need to factor in when it comes to investment.